Yes, my good viewers and students at the same time, and the professionals who use my videos in excelling in the professional world, that is accounting. So remember that we have been covering various areas in the advanced financial reporting paper and the financial reporting paper, which is covered by CASNEB, that is the relevant body, but under the course called CPA. So for today's session, I would like to talk a bit about the diluted earnings per share and the restated earnings per share, and a bit concerning the basic earnings per share. So remember that when we talk about the earnings per share, according to the International Accounting Standards 33, we always say that listed entities are supposed to present the earnings per share and the diluted earnings per share. So for this session of today, I would like to base my emphasis on the question of advanced financial reporting paper, that is April 2022 sitting, question 3C. So in my previous video, which was posted on 18th May 2022, we did that question partially, whereby I did the part of basic earnings per share, of which I said for you to get the basic earnings per share, we always take the profit attributable to ordinary shareholders. We divide with the weighted average number of ordinary shares. So we did that part of the basic earnings per share, whereby I explained what is required for you in that relevant question of April 2022. So for today, I would like to start from the second part of that question, that is the restated earnings per share. Then finally, we finish with the diluted earnings per share. So when we talk about the restated earnings per share, we always say that this is a comparative EPS. Right now, in this question, they were in need of the restated earnings per share of the year 2020, of which the basic EPS, which we did was for the year. The basic EPS was for the year ending 30th September 2021. So that is the one we did. So now for the restated EPS, they need that one of 30th September. 2020. So when we do a restated earnings per share, what we want to check is all about the performance of an entity in two comparative years. So remember that in that question there was an aspect of rights issue. So when doing your aspect of the restated earnings per share, you need to check which item do you have. Do you have a rights issue? Do you have a bonus issue, share split, or reverse split? So like in our question, there was an aspect of rights issue in the year 2021. So of which you were told that in that question of ours, you were told that as per note 1, this is question 3C, April 2022 sitting, advanced financial reporting paper, CPA, which is under CASNEB. So they are saying that the following transactions took place during the year ended 30th September 2021. Note 1 of that question, they said on 1st January 2021, the company issued 1.8 million ordinary shares in a 1-for-5 rights issue at the price of 2 shillings, when the market price per share on a cum rights basis was shillings 5. Remember that we said that, or I can repeat and say that, a rights issue is whereby you find that the entity issues shares to the existing shareholders at a price which is lower than the market price. Right now in this scenario, the entity issued shares to the existing shareholders on a proportion of every 5 shares they were in possession, they were receiving 1 at the price of 2 instead of the market price of 5. Instead of a market price of 5. So which means that they were being given shares at the lower price of 2 shillings instead of the market price at 5. That is what we call a rights issue. Shares issued to the existing shareholders at a lower price than the existing market price. So when there is this aspect of rights issue and you are doing a restated EPS, for you to make a decision about the performance of the entity in 2 comparative years, like now in the year 2020, that is the year ending 30th September 2020 and the one ending 30th September 2021. So what are we supposed to do? Remember that the rights issue was in the year ending 30th September 2021. So we go with the assumption that this rights issue was in the previous year, the year ending 30th September 2020. So we compute a restated EPS of the year 30th September 2020 with the assumption that the rights issue was in that previous year. Then finally I would be able to compare the performance of the entity by checking the 2 earnings per share. The one for the restated for the year ending 30th September 2020 and the one we got in our first computation of basic earnings per share for the year ending 30th September 2021. So remember that when we talk about restated EPS, when we talk about the restated EPS, and you have the aspect of rights issue, what you do is all about you compute the basic EPS for that year 2020, you multiply with the fair value, not the fair value, but theoretical exercise price. You multiply with the theoretical exercise price, you divide with the fair value of the shares before the rights issue. So, of which we know that the basic EPS is equals to profit attributable to ordinary shareholders. You divide with the weighted average number of ordinary shares. So when we talk about the profit attributable to ordinary shareholders, what are you required to do? Remember that we always start from the reported profit after tax. We deduct the preference dividends and we deduct the profit attributable to minority shareholders. So in this question of ours, you are told that in the 3rd paragraph of that question, that is question 3C, the 3rd paragraph they said, our remitted profit for the year to 30th September 2021 from continuing operations was 14,575,000. So that in brackets they said 30th September 2020, 15,100,000. So which means that the profit for the year for 30th September 2020 was 15,100. But in that relevant year, the year ending 30th September 2020, there is no aspect of profit attributable to the NCI and there is no preference dividends. There is no dividends attributable to the preference shareholders. So which means that our PAUS for the year 2020, that is 15,100. So what I'm supposed to divide with is the one-nose, the weighted average number of ordinary shares. So remember, these are just shares which are weighted as per the time factor. So remember that the shares which were in the year 30th September, the year ending 30th September 2020 are the one which will be opening the year ending 30th September 2021. So remember that the year ending 30th September 2021, so we have 2 years here. We have the one ending 30th September 2021, which is starting on 1st October 2020. And we have the previous year ending on 30th September 2020. So which means that this one was starting on 1st October 2019. So remember that at the start of the question, you were told that R Limited, a publicly traded company, had 9 million ordinary shares of shillings 1 per value and 1,007% redeemable preference shares of shillings 10 per value each on 1st October 2020. So the ordinary shares which were outstanding as at 1st October 2020, 1st October 2020 are 9,000. This is 9,000. So which means that these shares which are outstanding as at the start of the year here, they were the one which closed this previous year. So which means that these are the shares which were outstanding in the year ending 30th September 2020. So that is the one we weigh for the entire year. So it remains to be 9,000. So we divide with 9,000. We multiply with the theoretical exercise price. You divide with the fair value. So you remember that we said for you to get the theoretical exercise price, you always use the proportion at which they were issuing the rights issue, considering its prices, the price at which they issued the rights issue and the market price. As per the additional information number 1, the proportion of the rights issue was 1:5. So 1 share for every 5 held. So this 1 share, they were being given at shillings 2. The old shares in the market, the fair value was 5. So what you do, you take 1 new at shillings 2, and you say 5 old at shillings 5. So what you do here, you multiply this. 1 times 2 is 2. 5 times 5 is 25. So you add this, that is 6. 1 plus 5 is 6. 2 plus 25 is 27. So you take 27, divide by 6, you get 4.5. So I think that one you remember. If you have watched my video on the basic EPS, I think you know how you are supposed to do for the theoretical exercise price. So that is what we come and say 4.5 divided by the fair value, which is 5. So remember that as per the note 1, the fair value, the market price was 5, of which the price at which they issued the rights issue was 2 shillings. So up to this point, we can be able to get the restated EPS for the year. The restated EPS for the year 2020. So 15,100 divide 9,000. So that is 0.1. So that is 15,100. You divide with 9,000. That is 1.68 times 4.5 over 5. So this is 1 point. So this is shillings 1.51 per share. So remember that the earnings per share for the year 2021 was 1.25. So this one we did in the first requirement. In the previous video, in our previous video, I did the basic EPS. So go and watch so that you know on how we arrived at the 1.25. So which means that I can be able now to comment on the performance. So this is the EPS for the year 2021, and this is the one for 2020. So you can see there is a reduction, there is a decline on these two earnings per share from 1.51 to 1.25. So you could have commented and said that the performance of the entity in the 2 consecutive periods declined from 1.51 to 1.25. So there was a slight decline in terms of performance of that entity. So once we are done with the restated EPS, we can go forward and do now the diluted earnings per share. So when we talk about the diluted earnings per share, remember that the diluted earnings per share implies it implies a reduction in the basic earnings per share. It implies a reduction in the basic earnings per share. So that is why we say that dilution is a reduction in value. So diluted EPS signifies a reduction in the value of the basic EPS. So that is according to International Accounting Standards 33, a company is meant to disclose both basic and diluted EPS, with the diluted EPS being what-if analysis. The diluted EPS indicates to the users that there is a possibility that the basic EPS will decline in the future if the number of ordinary shares increases. So if there is no possibility of the increase in the number of shares, then the basic EPS and diluted EPS are the same. So the possibility of decline in the basic EPS arises when the firm has promised to issue new ordinary shares in the future. So that is a potential ordinary shares. So when I would be doing the diluted EPS, remember that when doing the diluted EPS, we always use the potential securities. So the securities which are likely or unlikely to be converted to ordinary shares. So the securities which are likely or unlikely to be converted, so they are likely or unlikely to be converted to ordinary shares in the future. So, which are these securities? We have convertible preference shares, convertible debentures or bonds, and we talk about stock options or warrants. So in our question for April 2022, question 3, Advanced Financial Reporting paper, offered by Kasnet under CPA. Under that question, that is question 3C, the potential securities which were there were 2. So that is the stock options and the debentures. But they said convertible bond. So it was a stock options and convertible bonds. So we need to know when doing the aspect of diluted EPS, how do you deal with bonds? How do you deal with stock options? So when we talk about stock options, this is when the company is requiring to sell at a price. What is the company trying to sell? Securities, which is shares. So at the price that is less than the market price at a future date. That is when the options or warrant owners exercise their rights. So if the exercise is carried out during the financial period, then in computing the basic EPS, all the shares on issue on the exercise are included from the date of the issue. So if these shares through the stock options are exercised, remember that you have to include them when computing the basic EPS. But on our question, they were never exercised. That is why they never affected our basic EPS. But now for computing diluted earnings per share, we assume that they were exercised. They were exercised. So what are we supposed to do? According to International Accounting Standards 33, it recommends that only the bonus shares to be included in computing the diluted EPS. So that is after we have assumed that the exercise took place for the purpose of computing diluted EPS. We do what? Only the bonus shares to be included in computing the diluted EPS. So there is no saving which is made to the earnings, and therefore the adjustments are only made to the WANOS, the weighted average number of ordinary shares, by adding the bonus shares, So where relevant, you have to do, you have to prorate, that is, on the basis of time. So let us start by doing that first aspect of stock options when doing the diluted earnings per share. Then once we are done with the stock options, we do the second potential security, that is the convertible bond. So remember that there are various steps to be followed when doing this aspect of a diluted EPS. So the first step is you do the basic, and that was our first requirement. That was requirement number 1, of which we did the basic EPS. So when asked about the aspect of the diluted EPS, the examiner will obviously ask you to do the basic. So we did that. Already we know our basic EPS for the year 2021, that is 30th September 2021, was 1.25. So the next step you do is all about to determine the order of ranking the securities. So we need to check these potential securities, the effect they have to the basic earnings per share. So which security has a higher potential of diluting the basic EPS, and which one has a lesser potential? So what we do, we start from that step 2. So we determine the order of ranking the securities. The order of ranking the securities. We determine the order of ranking the securities. So the first column is that one of potential securities. Then here there will be earnings, incremental earnings. So we have incremental shares, Then we have earnings per incremental shares, earnings per incremental shares, earnings per incremental shares. Then we do what? We rank. We do the rasting of ranking. So we start from stock options, of which under the stock options, under earnings, it's supposed to be 0. Because we said there's no savings, which is done. The only thing we record is all about the bonus shares. Remember that under that question of ours, they want to exercise the shares they want to exercise that option at 1.5, of which the average market price was 2. That is the second paragraph of that question. So which means that the bonus shares to record here, we say 2 minus 1.5. So this is the average market price minus the price at which they were to exercise the option. You divide by the average market price. You multiply with that option, the shares which they were to exercise based on that option. So using my calculator there, I would say that is 0.5 divided by 2 times 2500. So this is 625. So 0 divided by 625, so that is 0. Then the next thing we talk about is convertible bond. We talk about the convertible bond. So talking about the convertible bond, remember that again we need to know how to deal with the convertible bond. We need to understand on how to deal with the convertible bond. So this aspect of a convertible bond, what are you supposed to do with the convertible bond under diluted earnings per share? So we always say that if this bond is converted to ordinary shares, obvious we have to include those ordinary shares in computing the basic earnings per share. So if there is no conversion, then we assume conversion took place. In order to compute the diluted EPS, we assume that the conversion took place for us to do the diluted earnings per share. That is on the case when conversion never took place. So what are we supposed to do to the earnings and the shares? So adjustments are made to the earnings by adding interest, net of tax. And also remember that adjustments are made to the shares. So adjustments are also made to the shares by adding new shares that could have been issued on conversion. So remember that the proportion of conversion, according to additional information number 3 of that question, the proportion was 60 shares per 60, that is 60 shares per 100 bond. That was the proportion of converting, if they were to convert, of which we will assume. But the interest was at 12%, and the value of the bond was 5,000. So what we do for the earnings, we need to record that interest net of tax. So that is 5,000 times the period was, this bond is from July 1st. So July 1st, so July 2021 to 30th September 2021. So those are 3 months. July, August, September. So those are 3 months. So you say 3 over 12 times 0.7, because net of tax, 1 minus t. T is 0.3. So that is 0.7. So for the shares, if they were to convert this bond, they want to convert on the proportion of 60 for every 100 times 5,000 times the period. So 3 over 12 from the time that bond existed. So what you do here is all about 0.12 times 5,000 times 3 over 12 times 0.7. So this is 105. Then 60 divided by 100 times 5,000 times 3 over 12. So this is 750. So if you take 105 times, that is divided by 750, you are getting 0.14. So that is 105. You divide 750. Then after that, now we can be able to do the diluted EPS. So for us to do the diluted EPS, so remember that we have the earnings and we have the shares, then diluted EPS. So before doing the diluted EPS, remember that we were to rank this one from the one which has a least effect to the basic EPS, which is this one, and this is number 2. So then we come here and start with basic EPS, which is 13,875, 11,100. So we divided this, we got 1.25. This one was from the first requirement. The number 1 here is all about the options. So the options, that is 0 and 625. So we add, so 13,875. So 11,100 plus 625. So this is 11,725. So we take 13,875. You divide the answer. So that is 1.18. Then the second one was a convertible bond. Convertible bond, which is 105. And we have 750. So 13,875 plus 105. So 13,980. Then 11,775 plus 750. So that is 12,740. That is 475. So I take 13,980 divided by the answer. So that is 1.12. So the diluted EPS is all about 1.12. 1.12. So per share. So that is how you were supposed to do this question. Welcome to the online classes, guys, whereby we do session on advanced financial reporting, financial accounting, and in all other areas of a CPA. So, and other than the online classes, we do the practical classes on accounting. That is from Sage, Pestel, we train on that, on how to file returns, and in many more areas of accounting. So thank you for your time. Thank you for subscribing to this channel, and at the same time you can share to your friends so that we can be able to grow together. So welcome and thank you for this